liftoff. Americans return to space as Discovery clears the tower.
TTMTrades, welcome back. Today we're going to be talking about multiple time frame analysis and how I am analyzing, doing technical analysis on the ETF SPY SPY and how we're looking for intraday trends to pour over into the higher time frames to kind of give us an idea of how SPY is going to trade. Okay, so one of the key things that we pointed out last Friday in the Discord, and let me bring that up real quick. Hold on one second. One thing we pointed out last Friday in the Discord, okay, we said 293 is a key support level on the weekly charts. So this is the area we want to watch today on the SPY. If the market closes above it, then that means one of two things coming into this week, next week. The market will consolidate all next week above said area, moving up and down day to day, or it will reverse pending the COVID-19 virus news, okay? So fast forward to today, and we posted this morning in the Discord just to get everybody's mind in the right place. Today at 8:05 a.m., as we talked about last Friday, the 293 level on the SPY or the 2952 level on the SPX is holding very well, and this is the key level we wanted to watch to see if the market broke through. Friday sell-off, immediate buying brought the market back above this level. Now even today, prior to the market open on the futures, it is struggling to stay below said area. So this may be a good time to exit all puts and start looking to position yourself for calls as the market wants to attempt to bounce from this area. All right. So, does not necessarily mean we will go on a strong uptrend to make higher highs, but as of now, a bottom has been created for the market to at least attempt a recovery before possibly creating a lower low. So position yourselves appropriately and protect the bag. All right. When we say protect the bag, we're talking about that money. Okay. So we're going to go over to the charts and we're just going to break down how we looked at this from the moment SPY broke down to now, how it's base building and trying to transition back to the upside. Okay. So looking intraday, right? When we was looking at ticker SPY, and the reason we was able to kind of spot this downtrend happening, one was because we was monitoring it on an intraday level, right? Most traders, they look at their charts and they only look at them on a day-to-day basis, and a lot of the times you can kind of see these moves happening prior to them happening on intraday charts if you're looking at them just right. Okay, now what's very important for me on my double Bollinger Band trading strategy is one, the middle Bollinger Band, okay, and the 150 period SMA. Okay, a lot of traders use the 200 period moving average, right? That is the bullish zone in which, once the stock is performing above its 200 period moving average, it's considered in bullish territory. And a lot of the big hedge funds and investors are buying the stock in that area. A lot of stocks that are performing below that 200 moving average, a lot of big time investors don't really touch them, and unless they're buying them to get cheap shares and so on and so forth, right? So why don't I use the 200 period moving average? Reason being is because it does not correlate to my double Bollinger Band strategy. Okay, with the double Bollinger Band strategy, by default, that middle band is the 20 period moving average. Okay, I don't use the 20 period moving average. I use the 30 period moving average because when I trade it, I've always wanted about a month's worth of trading data to kind of get an idea of what's going on with said stock. Okay, yes, there's only 22 trading days in a month, okay, but still I wanted a wholesome month of data, roughly 30 days of trading data, to kind of identify my short-term trend for a stock. Okay, so a month was my short-term trend that I look for, so I use the 30 period moving average. Okay, now when the price action crosses above that 30 period moving average, then that lets me know the stock is in a nice trend on a short-term basis. All right, and the 150 period moving average came into play because we take a 30 period moving average. When we went out to when I started looking at the weekly, I wanted to be able to identify where I was at on the higher time frame, even if I'm looking into a lower time frame. So the best way to do that was I went out to the weekly chart and I looked. I said, okay, 30 period simple moving average on the weekly. Okay, so this is the sum of 30 weeks worth of price data. 30 weeks, right? Weekly chart, 30 period simple moving average, 30 weeks of data. Okay, how many days are in 30 weeks? All right, we have 5 trading days, 30 weeks, 30 times 5, that equals 150. All right, so that's how I came up with the 150 SMA. So once I came up with 150, that's what I put on my daily chart. And once I put that on my daily chart, from that moment forward, not only was I able to identify where I was at on the daily chart as far as the uptrend on the daily, but I was also able to identify how I was positioned on the weekly chart, right? So looking at SPY, every time it pulled back to this 150 SMA, as you can see here, from May all the way running up to February, you will see that that's the weekly charts, middle Bollinger Band, right? May, middle Bollinger Band, that 150 period, middle Bollinger Band, and it runs up, okay? So that's why I use 150 period SMA, because it helps me identify where I'm at in a larger time frame, even if I'm trading a lower time frame, okay? And the math may be off here and there as we go into the smaller time frames, but it still gives me a rough idea how I'm positioned to that higher time frame. All right, so moving forward, okay? With that being said, another rule of thumb is anytime the price action is breaking outside of the Bollinger Bands, whether it's up or downward, you always move out to the next higher time frame to identify those support levels on that higher time frame, because obviously per the support and resistance levels on the double Bollinger Band on that time frame, if the price action has broken out of those support and resistance areas that the bands have conformed to over the past 30 days of price action, then obviously you need to go out further and identify on a higher time frame, well, where are some other key areas of support and resistance. So once the daily broke out of the bands like this, I immediately go to the weekly chart and I start identifying, okay, what are key areas on the weekly chart, because all key areas on the daily as far as the past 30 days of price action has been violated. As you can see here, the middle Bollinger Band, the 1 standard and the 2 standard, all violated. So now we zoom out to the weekly and we see, okay, 309 and 293 are the two key areas. All right, we violated 309, which is the 150 SMA. We violated that, which we saw last week. Then, okay, if we violated that, then where's the 1 standard deviation Bollinger Band that sits right under the middle BB? All right, well, that's sitting at 293. So that's our next line of support. So that's how I identify my support and resistance areas. All right, now, how do we identify the breakdown? The biggest thing is anytime a stock is in a strong uptrend, it will maintain above its middle Bollinger Band. If it's in a very strong uptrend, it will stay above its 1 standard and 2 standard deviation, constantly pushing up, creating higher highs. Anytime the stock wants to pull back and consolidate, it'll hit the middle band, which is its short-term average, which is a 30-period simple moving average, and then it will continue to trend up, pull back and consolidate, and then continue to trend up. Okay, anytime the stock falls below its middle Bollinger Band and stays below that middle Bollinger Band on any time frame, then that means that the momentum within that time frame is being lost. All right, and when I see the momentum within that time frame being lost and it breaks out of these support and resistance areas on that specific time frame, that is when I zoom out to the next higher time frame to identify key support and resistance areas. Okay, so the SPY, this is how we was able to identify the SPY about to break down. So with all that being said, I went back 10 days on the SPY starting on the 19th of February. And as you can see here, this is the 5-minute chart. All right, so looking at the 5-minute chart, you can see it was above its 150 SMA. And then as you see right here, when it dipped down below the 150 SMA right here down to 333, I knew that on the higher time frame that we just dropped below the 30-minute time frame middle Bollinger Band. Okay, so knowing that, I know that we're bleeding over into the higher time frame because we're already losing momentum on the 5-minute chart. And not only are we losing momentum on the 5-minute chart, but it violated its 150 SMA. And that was on February 20th, right? So when I zoom out to the 30-minute chart, you're going to see the price action cross below the 30-minute chart middle Bollinger Band on the 20th of February. So we go out to the 30-minute. You look here, price action run it up. It violates the middle Bollinger Band, and that's right here on the 20th of February. And I was able to identify that on the 5-minute chart due to that 150 period SMA moving average. Now, I zoom out to the 30-minute chart because I'm like, hey, on the 5-minute, we violated the long-term average on the 5-minute chart, the 150 SMA. Let me go to the next higher time frame and see what's going on. So I see we violated the middle Bollinger Band. Price action is sitting on its middle Bollinger Band on the 30-minute chart, which is the 2-hour chart, 150 SMA. 30-minute chart is finding support on its 150 SMA, which is the 2-hour chart's middle Bollinger Band, okay? So we lost momentum on the 5-minute chart. We're losing momentum on the 30-minute chart because we violated the middle Bollinger Band. Now I'm looking on the 30-minute chart to see if we're going to hold this long-term momentum on the 30-minute time frame, which is the 150 SMA. Once I see we violated the 150 SMA on the 30-minute chart on the 21st of February, now I see that not only did we lose momentum on the 5-minute chart, but now we lost it on the 30-minute chart. So now I'm going to zoom out to the 2-hour chart because we just violated the 2-hour chart's middle Bollinger Band. Okay. And again, the stock is in a strong uptrend if it stays and hold above its middle Bollinger Band. Okay. So now that we violated that on the 5-minute, in the 30-minute, as you can see here on the 21st of February, I'm going to zoom out to the 2-hour chart, right? So zoom out to the 2-hour chart, we should be below its middle Bollinger Band on the 21st of February. So now I go to the 2-hour chart. I see here, 18th, the 21st is right in here. I see that we've fallen below the middle Bollinger Band, and now we're no longer able to break above that middle BB on the 2-hour chart. Okay. So with that being said, I see the 2-hour chart falling below its 1 standard and 2 standard deviation Bollinger Bands. I see that we're about to go on a downtrend. Okay, the RSI is already trending below its averages. The Shande trend meter is below its averages. The PMO, which was showing upward momentum, began slowing down and curling down. So I'm getting all these different signs that we are about to lose momentum on the 2-hour chart, right? So what's below the 2-hour chart? Well, the 2-hour chart, 150 SMA, which is the daily's middle Bollinger Band. So I know now if the 2-hour chart falls below its 150 SMA, then the daily chart has lost all momentum on a day-to-day basis, and we might be reversing and going into a downtrend. So when I look, and mind you, we took puts on this day because we was already seeing the momentum break down time frame by time frame. So when the 2-hour chart gapped down like this and fell below its 150 SMA sitting at 328, I knew that we just fell below the daily's middle Bollinger Band, which means we lost all momentum on a day-to-day basis. So when I zoom out on the daily, looking at the 24th to the 25th, you'll see here the gap down. 24th, 25th, the gap down where the 150 SMA on the 2-hour chart is the daily middle Bollinger Band. You see that we gapped straight through it, right? So when I see that, I know that we're about to go into a downtrend because one, we gapped down. PMO is already turning downward. RSI is already below its averages. Shande is no longer holding above its areas. I know we're going into a downtrend, and then we run into this strong downtrend. All right. Now, what's true for a strong uptrend, right? A stock will stay above its middle Bollinger Band, and if it's in a very strong uptrend, it'll hold above its 1 standard and 2 standard deviation. And when it needs to consolidate, it'll pull back towards the middle BB and then continue running up, right? What's true for an uptrend is true. What's true for an uptrend is also true for a downtrend. Okay, so looking at the 2-hour chart, you see that we're in this strong downtrend as we stay below the 1 standard and the 2 standard deviation. And now we get this breakout here, this strong run up, right? So a lot of people are late to this run up right here. But again, if you do multiple time frame analysis from the 5-minute all the way back up to the daily, you can pinpoint this bottom right here before it makes its run. All right, so charts will break down from the smaller time frames and then finally reveal itself on a higher time frame, and then stocks will build back up and base out and start to reverse on smaller time frames and begin to reveal itself on a higher time frame. So let's go back to the 5-minute chart. When the 5-minute chart violated this 150 SMA like we just talked about, and it bled over into every other time frame, on this downtrend, when we wrote it down, my key thing was watching that the 5-minute chart stayed below its 150 SMA the entire time, and the PMO stayed in negative territory, right? So we got that the entire time. Constantly below its 150 SMA. Every time it attempted to go towards the 30-minute chart, middle Bollinger Band, it could not make it, and then it just continued to drop, all right? Now, looking at the 5-minute here, you can see the 5-minute chart is beginning to base out in this area. And let me bring up another 5-minute chart with this view just a little bit closer. All right, so you see the 5-minute chart starts basing out here on the 28th of February, and we'll pull up one that's a little closer. We see that it's basing out here on the 28th of February, and it starts moving sideways. And it's nothing special because it's been doing that every single time, and it's never crossed its 150 SMA. It bases out, and then it fails downtrend. Bases out, fails 150 SMA, downtrend. Bases out, try to make a run, fails, downtrend. Okay, so now come the 28th of February, it's basing out again. I'm seeing the PMO cross up and move above its averages, and it's trying to move into positive territory, right? which tells me that there's some buying behind it, because again, the PMO and the Shande helps me identify the overall trend. That's what I use them for, to identify overall trend. And I use the Bollinger Band whip to help me identify low points of volatility, so I can get in when my premiums are cheaper. And it helps me identify high points of volatility, so I know when to sell my premiums because the volatility is high. Okay, so I use the combination of those along with the Bollinger Bands to help me identify these things. Now, 5-minute chart is basing out on the 28th. All right, it keeps basing right at that 285 to 288. Nothing special. I'm thinking the price action is going to push up to the 150 SMA like it's been doing ever since the 19th of February and fail right at that point. As you see, this is where we're looking at as we zoom back in. So this morning, the price action spikes up. It pushes into that 150 SMA. I'm anticipating that the price action is going to reverse and continue the downtrend. Now, I'm making a bad call for myself because we've already identified two things, right? We've already identified on the higher time frame, the weekly, that 293 is a key area of support, and that the SPY was not going to close below this on a week-to-week basis, because last week it closed above it. All right, which means this week is going to try to hold above it and move higher, right? So me seeing it base out like this and then pushing to the 150 SMA, I should have known that taking puts was a bad idea, because we're already at the bottom of the trend that was created last week. This bottom was created last week on Friday the 28th, and we knew this bottom was created. So for me, seeing the price action push into the 150 SMA and then take puts first thing this morning with the idea that this is going to continue to go lower, I'm already in the wrong. Okay, so this morning the price action pushed up into the 150 SMA. The PMO is already trending up, and now it has moved into positive territory. Okay, mind you, the entire time the PMO on the downtrend was below its zero line in negative territory, showing that the bears were in complete control. So today, the PMO is trending up, showing me that the trend is beginning to shift back into the bulls' favor. Price action pushes up to its 150 SMA, right? I already know we're at the bottom. We've identified that on the weekly chart prior to. 5-minute chart PMO is trending up and now in positive territory, and it hasn't been in positive territory the past 5-6 days. Okay, so these are all signs that I need to go long and I need to take calls. All right, and then I took puts first thing this morning because in my mind I was anticipating 150 SMA hit, rejection, go back down, make some quick money, right? Well, price action pulled back down, but immediately hit that 150 SMA and broke through. Once I saw that, I knew that the S&P, well, the SPY was going to make a run from that 293 bottom that we called prior to the market open today and Friday morning prior to the market opening. We knew 293 was a bottom. All right. So once it did that, I immediately closed out my calls and my puts, and I took about a $3,000 hit, and I immediately opened calls. All right. Soon I opened my calls. What we saw on SPY on the reverse when it broke below its 150 SMA, which is the 30 minutes middle Bollinger Band, I knew here that we broke above the 30-minute chart middle BB, which is very important because, again, a stock is in a strong downtrend as long as it cannot break above its middle Bollinger Band and it stays below the middle BB and its 1 and 2 standard deviation Bollinger Band. Hence the 30-minute below its 1 and 2 standard deviation Bollinger Band, unable to break the middle Bollinger Band at all times. 30-minute chart. 2-hour chart below its 1 and 2 standard deviation Bollinger Band, unable to get above its 1 standard deviation to stop the downtrend and then attempt the middle Bollinger Band. Right, all downtrend traits. Now we see on the 5-minute chart we break the 150 SMA today, which tells me now we just crossed into the higher time frames middle Bollinger Band, right? And if the 30-minute chart crossed above its middle Bollinger Band, then that means now the 30-minute time frame is no longer in the downtrend. So we have the 5-minute chart no longer in the downtrend, above its middle Bollinger Band and above the 150 SMA, PMO positive territory. So now zoom out to the 30-minute chart. I see that we're above the middle Bollinger Band. As we hit that 1 standard deviation right here with some resistance, is that price action is consolidating. It immediately breaks out and now it's heading up to the upside, breaking outside its bands. And what is the PMO doing? The entire time it was below its 75 SMA, showing us that the trend was slowing down and breaking to the downside. Now the PMO is breaking back above both its averages, although still in bear territory. Is trying to trend back up, showing us that the trend is reversing. Okay, RSI holding above its averages. Shande, which has been below its averages the entire time, finally found support here and started breaking out, which was an early warning on the 30-minute time frame. So you can see the 5-minute chart break above its 150 SMA, which now that's bleeding over into the 30-minute chart. So now I go to the 30-minute chart. 30-minute chart holding above its middle BB. Now it's breaking outside of its bands, heading to the upside. So now I'm going over to the 2-hour chart. All right. Now looking at the 2-hour chart, I knew once we broke above that 1 standard deviation Bollinger Band on the 2-hour chart that the downtrend had stopped. All right. Now what I'm looking for is once we break above that 1 standard deviation Bollinger Band, because again the stock is in a strong downtrend as long as it stay below its 1 standard and 2 standard deviation, right? As we break above this 1 standard deviation, I'm looking to see if we're going to pull back and create a double bottom, right? But as we pull back the same 1 standard deviation we just broke above, I'm also trying to identify, are we going to use that as a key level of support now? So as we broke above this 299 area, as we begin to pull back, I notice as we pull towards the 1 standard deviation, it found it as support, and then in that next 2-hour time frame, we pulled towards the 1 standard deviation, we found it as support again. Okay. And with that being said, on the pullbacks, I noticed that the 5-minute chart was still steady trucking up. And if the 5-minute chart is still holding momentum, then that momentum bleeds into the 30-minute chart. And then the 30-minute chart, if it's holding momentum, then that's going to bleed over into the 2-hour chart. All right. So what are we looking at? 5-minute chart has broke its downtrend intraday. As you can see here, 30-minute chart has broken its downtrend and consolidated, and now it's breaking out to the upside. And now we see the 2-hour chart has broken its downtrend and it's going to run up to 313 possibly tomorrow, give or take 315. And then what it's going to do is probably going to pull back, and it needs to consolidate, right? Because anytime the price action is below its top 1 standard deviation but above its bottom 1 standard deviation, the price action is consolidating. We call that ranging, right? It's ranging. When it breaks outside that bottom 1 standard deviation or that top 1 standard deviation, now the stock is moving in a trend. All right. So tomorrow we're probably going to push up to that 313, 315 area, because this is the next line of resistance I'm looking at, right? You look at the 5-minute chart, we have no lines of resistance, right? I don't do the draw a line here, draw a line here. I don't like doing all that. The Bollinger Bands do it for you because they conform to the price action based off the amount of data that's being fed into them. So the Bollinger Bands do all that for you. So again, like I told you in the beginning, if you're breaking out of the bands on that time frame, you zoom out to the next higher time frame. So 5-minute chart, we're breaking out of the bands. Go to the 30-minute chart. 30-minute chart, we're starting to break outside the bands. Okay. If we're breaking outside of the bands, then we need to identify what the next level of resistance is on the higher time frame. So we go to the next higher time frame. We see that next level of resistance is sitting at 313, 314. All right. So we know tomorrow we're going to push up to that 313 to 315 area. And if you look at the 5-minute chart, the 5-minute chart is starting to get oversold. So what do you think is going to happen? If it's starting to get oversold, it's going to pull back here soon. So what I see is we're going to run to that 313 to 315 area. 5-minute chart is going to be oversold. It's going to need to pull back and consolidate. So we'll hit this area possibly tomorrow. Pull back and consolidate, right? As long as we stay above this 301 standard deviation Bollinger Band on the 2-hour chart, then that means that this bottom is still intact and it's just consolidating in this range of 300 to 313, right? So we'll pull back tomorrow, and as long as it stays within that 300 to 313 range, then the bottom is still intact and it's still being built on a higher time frame, which is the 2-hour chart. As the bottom is constantly being built on the 2-hour time frame, once that bottom is built with the 2-hour time frame consolidating, which is going to take about a day or two, maybe at most. Once it consolidates and then the bulls take back control and start running it back to the upside, now we're looking at 327 as the next line of resistance, right? Now we zoom out to the high time frame, which is the daily. Again, you see the bottom 1 standard deviation sitting at 315 like we just talked about on the 2-hour chart. And then you see 327, which is the daily's middle Bollinger Band, which is reflected right here on the 150 SMA. So we know how we're playing out going into the higher time frames, right? So this is why we do multiple time frame analysis, right? The weekly had already gave us a cue that, okay, 293 is the bottom. All right, we pushed down into that area, immediate buy-in came into play. Okay, and then going into the week, we see that we touched 293, but immediate buy-in came into play, and we never looked back, right? And you're able to identify this move that looks like it happened so suddenly in 2 days. You're able to take these two candlesticks, and if you zoom into the 5-minute chart, you can see the base building happening, and you can see it breaking above its 150 SMA to get the momentum started to bleed over into the higher time frames, right? So this is how we do multiple time frame analysis to kind of help you pinpoint and snipe your entries to get in and out of a stock, right? But that's how I do it using my double Bollinger Band strategy, right? There's a lot of different ways that different traders do it through moving averages and however, whatever strategy they use. But this is the best way with the double Bollinger Band strategy, okay? The middle Bollinger Band is very important because it helps you identify the immediate trend on that said time frame. And the 150 SMA is very important for me because it helps me identify the higher time frames middle Bollinger Band. Okay, again, on a week-to-week basis, I know we're in the uptrend because we're above the 150 SMA, right? So I know we're good on a week-to-week basis. On a day-to-day basis, I know we're good because we're above the middle Bollinger Band. So not only are we good on a week-to-week basis, we're good on a day-to-day basis, and I know we're in a very strong uptrend just looking at the daily chart. Okay, and that's what the two key important factors for me are. Okay, middle Bollinger Band, 150 SMA are the most important ones. Just like we saw here, the 5-minute chart couldn't get above this 150 SMA. It finally bottomed out here as we saw on the weekly chart, which we knew that, and then it broke above its 150 SMA, which shows the momentum is beginning to shift back into the bulls' favor. Now, there's still a lot of legwork to be done, although the 5-minute is bullish, the 30-minute is turning bullish, and the 2-hour chart still has a lot of work and it still needs to develop. Okay, so the 2-hour chart still needs to do some consolidating and some base building here, which, like we said, it'll take about a day or two. But if it does that, then that base building that you see on the 2-hour chart soon bleeds over into the daily. And then when the 2-hour charts begin build a momentum and it starts its breakout to the upside, that bleeds over into the daily. And now you see how you get that multiple time frame analysis. Okay, so I hope that helped. I know a lot of people ask me, how do you pinpoint your entries, and why do you look at the different charts? Why is the 150 SMA so important? What's so important about the middle Bollinger Band? Those are all the reasons why, and we can go into that in a much more detailed way, but that's just the short and sweet of it. Okay, so today lost $3,000 this morning, taking anticipating the puts on this 150 SMA rejection as the price action has been doing the past couple of days, but it immediately broke above that 150 SMA, which I closed my position out, took the $3,000 loss, and immediately took calls as I saw the trend moving to the upside, and then made $7,000 on the calls, which covered the 3-hour loss and put the account at $28,000. So what's beautiful about that is I no longer have to abide by the PDT rule, the pattern day trader rule. So now I can hop in and out of stocks all day long and make money all day long. And I don't have to worry about just executing one trade that day and then have to wait a whole nother day for the money to process and all of that. So this build up to 100,000 should happen a lot faster now that I can make multiple trades throughout the day on multiple charts and be in and out. So this is going to be fun. I'll continue to update you all. If you got any questions, join the Discord down below. Hit me up or leave a comment. Till next time, TTM Trades. Oh, and if this video made sense and it helped you, please hit a thumbs up so that way I know it, okay? But till next time, TTM Trades, I'm out.
Houston, Tranquility Base here. The Eagle has landed.